Hey everyone, Anthony here with InTouch Mortgage Solutions. It's Friday, Finance Fridays, and thanks again for clicking on this week's episode. We have a lot to unpack on this week's episode, obviously talking a lot about what's happening with the Liberal government, their retreat, what's happening with immigrations. Did Stats Canada actually miss the mark when it came to actually calculating a lot of these new to Canada individuals? And obviously having a quick conversation about what's going to happen or what could be happening come September 6th. What do some of the economists predict will happen next week? And obviously, as we wait for the data to roll out when it comes to home prices and obviously inventory levels, as this potential increase or pause in September could lead the markets in different directions. Very quickly, they did meet in Charlottetown, PEI last week to discuss multiple components of the shuffle of what's happening with their party, but more importantly, the conversation around housing affordability, what they are planning to do. And out of that, there are some things. We heard that Sean Fraser plans to put a potential cap on students, on international students arriving from other countries. We'll talk about that and more in just a moment. Obviously, they've put the position that they will not slow down on immigration for the current time, at least right now, unless there's a lot more pressure being put on them to do so. And we've seen that happening now, where there's more pressure to say, look, we are pro-immigration here at InTouch Mortgage Solutions. Understand that this country was built on immigration. It needs new to Canada individuals to replace the aging population, especially in the construction and home building workspace, because there's about 20% of these individuals are currently retiring, according to the Home Builders Association, something we talked about in previous episodes.
I saw in the report that there's this shift away from skilled trades and thereby affecting the labor shortage in home construction. Explain that a little bit to us.
Yeah, one of the challenges that we're facing, like so many industries, is a shortage of skilled labor. We've got about 20% of our industry retiring over the coming decade. That's already started. And obviously, in recent times, we just haven't seen as many young Canadians coming into the industry. I think that many are starting to recognize that there are good opportunities for work in the industry and a really strong career.
So with that being said, obviously the government has switched focus on permanent residency on what they look at. So they went from a points-based system to a category-based system, which was referred to as what's called STEM. But they're looking at basically nurses in the healthcare department. Obviously, they're looking for tech, and they're looking for individuals with skilled trades. So obviously, this is a good shift because they're going after specific categories as opposed to points to help bring in the individuals we need in this country to fill some of these jobs. With that being said, obviously it's important to understand that immigration levels remain high. And one of the components that's been talked about is international students. Why is international students important? Well, they are actually not calculated in some of the numbers that are reported, and we'll get into what one economist had to say about that. But taking a quick second, looking at international students, why it's important, they're saying arguably around 750 to 900,000 international students are arriving in Canada. What this means is that as these individuals arrive, they are going to be spread out across the country. Canada has some of the best universities, and obviously the tuitions are much cheaper than they are in the US for an equivalent education. Most of these international students who arrive, they end up potentially staying in Canada, applying for work permits and permanent residency once they get into the country. And going through the education stream is generally much faster. It's a lot easier to get PR or work permits when you are a student. What the problem is that when these individuals arrive, depending on the campuses, a lot of these universities and colleges don't actually have adequate infrastructure to house a lot of these individuals, especially when you think about the magnitude of individuals. So that means that these individuals have to now find room and board. They have to find places to rent within those cities where the universities and colleges are located. And that obviously drives up the prices of rents in those towns, in those cities, because a lot of these individuals can compile themselves together into rooms and obviously pay more for rent, which obviously makes it less affordable for individuals who are working, single parents that are trying to find work accommodations or housing accommodations close to where they work. The other thing is obviously the universities and colleges potentially are going against the grain, obviously going to boycott or challenge the government with their cap of the potential cap that they want to put on international students, because international students pay more tuitions. It's more lucrative for the universities to take on these individuals. And not to mention, obviously, the problems around student housing, trying to get financing for these particular units. It's very challenging, at least here in Ontario, as you know, many individuals who are looking or were in the past looking to build or create these student housing plans or make these places into student housing rentals can be very challenging when it comes to the bank's perspective on them. So obviously that's a conversation for another point. But looking at what Benjamin Tal is saying as the economist for CIBC when it comes to these immigration numbers reported by Stats Canada, he's saying that they're underestimating them by about 1 million people.
I believe that we are undercounting the number of non-permanent residents in Canada by roughly 1 million.
CIBC's deputy chief economist, Benjamin Tal, estimating official government figures on immigration are wrong. He believes 750,000 non-permanent residents, mainly international students, have overstayed their visas and are still in Canada. And an additional 250,000 were not properly counted in the most recent census. Calculations Tal briefed the Prime Minister and his cabinet on last week in Charlottetown.
This is something that we have to fix because it has major implications for demand for housing. And if we are undercounting them, we are also undercounting demand for housing and therefore misallocating resources.
Implications also for key data from the Canadian Housing and Mortgage Corporation, which estimated 5.8 million new housing units must be built by 2030, but that's based on potentially inaccurate census data.
He's saying that obviously when the numbers are going in, a lot of these individuals that come in as, let's say, work permits or visas, they're extending them, they're staying longer. A lot of them maybe are not leaving. So obviously these numbers are very, very important to take into consideration. And obviously if he's correct in his assessment and his study and his analysis of this, well, this could be definitely major problems because if we have this many, we have 750 to 900 students, 500 plus thousand permanent residents arriving in Canada, well, you're definitely in a position where we're not building enough homes. And obviously we've heard not only from the Liberal government around housing, we've heard from Ontario's Premier, Doug Ford.
We need 1.5 million, and that's the base. And I didn't plan on the federal government bringing in 500,000 people. That's more than Florida and Texas. The fastest growing regions in North America are Florida and Texas. And we're way above them, way above them on growth. That's over 5 million people in the next 10 years. That's almost the size of 2 cities of Toronto being plopped down here. We need the federal government to support us. We need the federal government to come up with a national housing plan, not just for Ontario, but right across this country.
Obviously, we are definitely short on the houses that we need, especially when you look at 4 to 5 new migrants that arrive in Canada, they're only building about 1 house. And don't even get us started on the fact that new construction homes right now are definitely feeling the pinch. Developers are not in a position right now where they want to build. And even though there could be tons of incentives for them to build, the problem is that a lot of these builders, a lot of these high-rise condominiums, these individuals, maybe you're building in the missing middle, maybe you're building detached homes. Well, they're building less larger homes, more high-density products to fit a lot of these individuals in. But the problem is that they need to qualify. And in order for the builder to move forward with projects, especially a lot of the mid-sized builders, maybe not so much the larger builders that can self-finance, but a lot of these middle builders, they require a deposit, they require qualifications, and if they can't get individuals to buy and qualify for the mortgages, well, they don't get the financing in turn, let alone the fact that they're missing a huge amount of the workforce to actually complete these projects. Added in, obviously, the cost of material, labor, all these things are very, very important. And this is a big conversation right now. So we have Liberal government bringing in all these numbers, arguably mishandling the numbers. You have potential for required student housing, affordable housing. You have rents going up as mortgages and mortgage rates go up. Obviously, so do rents. Because as more individuals can't afford to buy or are looking for a place to purchase, well, if they can't do that, well, they're going to need rental housing. They're going to either be renting or living with others or in their parents' basements. So these are conversations that are happening in real time. And they're very, very important to understand as we look at the Canadian landscape of where things are headed. Now, obviously, the banks have reported a lot of their earnings and obviously they're in the millions. The banks are making profits. Obviously, the big conversation is how much money they're putting around or putting down for PCLs or credit. They're looking for these credit losses. These provisions for credit losses are amounting to billions of dollars. And obviously, this is a signal that there's potentially something looming ahead. But remember, OSFI is in charge of this. They are basically putting a lot of the pressure on the banks to do a few things. Obviously, make sure that the banks have the liquidity to cover these bad loans if they happen. Interestingly enough, and obviously conversationally, we haven't seen many defaults on the prime side, right? With the banks, the major banks, they're still reporting relatively low defaults. What we are seeing, and something we've talked about on this channel, is potentially higher numbers in the private equity space, where these rates were much higher. These clients and individuals were extremely over leveraged. But obviously, I think we're in around the 15 basis points to 30 basis points defaults. Obviously, we'll keep our viewers updated on what's happening with that, as well as what's going to happen next week with the Bank of Canada. So if you haven't subscribed to the channel, we invite you to do that. Obviously, hit that notification bell. But looking at what the banks are doing right now from the ground floor, there are obviously some banks that are pulling back. There's obviously a credit crunch happening right now as we start to see things like from Canada Guarantee, one of the major default insurers in Canada, potentially not reporting how many mortgages they have that are underwater. Now, there are two sides to this argument. A lot of them will say, well, that's because they don't want to report it, or two, because maybe there's been a lot of equity in the properties, and obviously understanding, what that loan was, what their systems could be telling them about those values, as opposed to what the market actual value is. But obviously, we'll have a little bit more data on that. But it's interesting as you start to see these little tidbits or these little nuggets of information start to pop up, how to decipher them. As I said, banks putting these provisions for credit losses, OSFI stepping in. We're still waiting on them to really give us an inclination on where the stress test rule is going, but obviously there's a lot to filter through right now. But obviously that brings us to the Bank of Canada, where it is a bag of mixed emotions right now between economists. Many economists, like I believe it was on 31 out of 34 that were interviewed, obviously this is what the Bank of Canada looks at when they look at expectations, what's happening in the market. Some of them are saying, that there's potentially no change to the overnight lending rate come September, but there are some experts that are saying, look, it might not happen in September, but it could happen at another point before 2023 is over. So at the tail end of 2023, we could see that policy rate bump up to 5.25%. Obviously, I believe that based on the data that we're starting to see and the economic outlook, GDP, obviously those job numbers, what's happening there, if we're starting to see a pullback, don't forget there are lagging indicators. These particular set of tools that are, or data points that the Bank of Canada is looking at are lagging. We talked about base effects as well last year, those year-over-year numbers. Bank of Canada is going to see them getting or remain relatively sticky. And what we mean by that is that we might see it in the 3s and the 4s, and we saw it at 2.8. So obviously how the Bank of Canada is going to take that information when you look at base year effects, what's happening with core inflation, obviously stripping out things like food and energy that are volatile, but, grocery bills, breads, meats, fresh produce, all these things are very, very important for the Bank of Canada, but GDP might not come in as planned. So obviously, as you can see, it's anybody's guess what could happen with the Bank of Canada. The best advice that we can give to our clients in this particular situation is if you're in a variable rate mortgage, obviously trigger or adjustable, is to understand your finances, understand your budget, what's your risk appetite, and how long can you survive with higher interest rates, because that is what the consensus is. No matter what happens on the 6th, even if we get to the point where they pause or they extend, well, we're going to see potentially higher interest rates at least through a good part of 2024, arguably maybe even into 2025. So this is going to put a lot of pressure as more Canadians are indebted. We'll leave it here. Just wanted to basically share that, what's happening with the Canadian economy right now. Let us know your thoughts in the comment section below on what's going to happen next week on the 6th with the Bank of Canada. Let's see if we can forecast what the Bank of Canada will do next. And we'll leave the video here, wishing everyone a wonderful Friday and an even better weekend ahead. Thanks for clicking. Thanks for watching.